So my other question to you was, what are some of the financing options? So I know you mentioned factoring, which is most people don't know about factoring. So could you just talk about that one a little bit and then just share what other financing options there are? And then I have another question about alternative lending whenever you are done with answering that question.
Yeah. So, and just one last comment on the last thing we just talked about.
Sure.
Easy quote for people to remember is banks love giving money to the people who can prove that they don't need the money. So when we're talking about business credit and personal finance and all that stuff, it's really about proving to the banks that you are a stable person and
Right.
that it's safe to give you money, you know? And ironically, they will give so much money to the very people who need it the least.
Yeah.
The most, those are the people who honestly have the hardest time accessing funding. But as
Mm,
far as funding options, a big one is always going to be equipment financing. So if you have any kind of facility where you're buying a lot of equipment, equipment financing is wonderful because usually there's an actual piece of equipment tied uh, to the loan.
right.
Let's say that you are I don't know, let's say you've got a factory and you need to purchase equipment, or you've got a restaurant or something that involves heavy equipment.
Mhm.
That's a very nice and simple one to get. You don't even have to have a really high score for that one. Invoice factoring is basically, and I touched on this a little bit earlier, but let's say that you've got a service business.
Mm,
I'll give you a real world example. One of my clients, he is a contractor.
mhm.
So if your house floods, he's the guy that'll come and get everything restored,
Yeah.
get all your cabinets fixed, get your floors fixed, all that stuff. Well, his problem is that he's got to wait for the insurance companies to pay the invoices, right? So the homeowner might not have had to pay, but the insurance company has to pay him after the work is done and everything. So now he's got this gap in time where he's done the work, but he doesn't have the money. Invoice factoring helps him. Does that
Mm,
make sense? Because that's where the bank is essentially saying, like, hey, we know that you're going to get this money, or we see that you have this steady flow of invoices at a very high dollar amount, so we're willing to give you the money in advance so that you're able to pay it back later.
right.
That I mean, getting the cash flow into people
Hmm.
faster is I don't know, it's like an incredible thing because you can really be in a bad spot if you have to wait for that money to come in, and just invoice factoring is bridging that gap for you. So that's a very big
Quick
one.
question. How is that different from like a cash advance or something?
So we don't do any cash advances. So I can't really speak too much in detail on cash advances because we don't give that one. This one is specifically based on your past invoices.
Right.
So having the ability to show that you had these invoices and that the money actually came in, so that
Right.
the people feel comfortable giving you the money ahead of time. We don't
So I
really
just
cash advances on our end.
Yeah, I know. So I don't want anyone to confuse it with cash advance, which is why I'm just kind of framing the question that way because it does sound like a business cash advance, right? But
Yeah.
we know like the net schedules sometimes are kind of like wonky, so this is a cushion, but it sounds like a cash advance in the fact that like, you show your paychecks, you get paychecks of every 2 weeks, and then you can kind of get an advance on $500, for example, in exchange for $50 of the paycheck when you get paid the next time.
Yeah.
So what's maybe like the rate on an invoice factor whenever you're gonna repay the bank for giving you that advance on the invoice?
So it is one very major difference is that invoice factoring tends to be revolving.
Mm,
An
okay.
example from one company, they're called Fundbox.
Mm,
Fundbox is a really easy one,
yeah.
um, and they usually have pretty good approvals. So they'll take a look at your past invoices and they'll say, all right, so based on these invoices, we think that you can use a $10,000 revolving line.
Okay.
Okay. So they'll give you access to that $10,000 based on the average of the invoices that you've gotten in. And then as that money is coming in, you pay back that $10,000 balance. So you've got that revolving line of business credit with Fundbox. Does
Mm,
that make sense?
yeah.
That is a very easy example, but the
Mm,
money doesn't necessarily go away after you've paid it back. You've now restored your balance and you're able to use that again.
okay.
You're able to use that in perpetuity until the account is closed or something else happens to it. Um, Another big one, if you want to get into business lines of credit and just revolving, is getting a an actual business line of credit at the bank, where basically they'll say, "Hey, based on your business, we will give you. We'll just use the same number, $10,000.
Mm.
But this one's not based on invoices. This one would just be based on your business history, your business credit score, and your personal financing, your personal, credit as well. And they'll give you that revolving line, similar to how a credit card is, but this is for actual transactions that are not going to be like on a credit card. This will go through a bank account. You'd be able to use a debit card like you would for anything else, but this money is revolving. It's constantly going back into the account and building up your credit. If you are a newer business and you feel like you can't qualify for that, you can actually do a secured business line of credit using a certificate of deposit. And this is one that I always tell people about just because it gives you the ability to really use your money twice.
Yeah.
So let's say that you're a normal person, you've got $10,000 that came in to your business. Normally, people will take that $10,000 and they will spend it on various things. Maybe you've got payroll, you've got to go buy more materials, you've got to go buy equipment or do whatever your business had to do to operate.
Mm-hmm.
When you are using a secured business line of credit, you want to just put one little step in between the spending. So you got the $10,000 from wherever. You want to take that money to the bank and put it into a certificate of deposit. Not every bank does this, but we actually offer a list of banks that do. So you want to take that money and put it into a certificate of deposit. Then you want to tell the bank, like, hey, over here, I've got $10,000 sitting in a CD. I need a business line of credit that is secured by that CD, right? So now you've gotten to use your money twice because the original $10,000 is still sitting in the account, gaining interest because that's what a CD is for. It gains a higher interest rate than a normal savings account. But now you've also got a $10,000 business line of revolving credit.
Right.
So technically have about $20,000, but the first 10 is just simply tied up, gaining interest for you. The reason that the bank will do this for you and do it right away with very little, with very few questions, is if you were to default, they don't have to really worry about anything because
they can just leverage your
get
CD
that money right out of your CD.
Right.
Usually, the business line of credit will be given to you for the term of the CD. So if it's a 1-year CD, they'll give you access to that account for 1 year. Now, at the end of that 1 year, right, your CD has matured, you've gained your interest, you're able to go back to the bank and say, hey, look, I've been such a responsible account holder. Make this an unsecured business line of credit. So now you've earned the right to now have that money unsecured for you. You've been using it to pay your bills or do whatever. Now you've also got the original money from the CD, and there's no limit to the number of times you can do this. So every time you get a large sum of money, let's say it's at least $5,000, take that, put it into a CD, turn that into a business line of credit, and then build your business credit up that way. You were going to spend the money anyway, right? We're just saying simply put a step in front of it so that you're able to spend that money and build your business credit at the same time. Another thing that achieves for you is it also helps to protect your bank rating. So if you remember earlier, I said that you need to have a bank rating that is a low 5, which is an average daily balance of $10,000 or more. Well, if you've got a CD, which is, got a static balance, or at least the balance is always increasing, now bank rating is protected because you're never dipping below that threshold for that bank account.